yields had this incredible move. And by the way, the velocity of the yields is now putting such pressure on the overall financial system that you're talking about a credit event and potential collapse. Now, today's pullback in yields, we may see a little reprieve, but I will say this, folks. The bond market, for those of you that don't know, the bond market is the biggest market in the world. In the U.S., about $50 trillion is the bond market. Globally, it's about $150, $140 trillion. So the fact that we are seeing yields go up this fast, you know what that does to bonds? It makes them basically worth a lot less. We're talking about bonds declining in value between 25 and 50%. When you're talking about $50 trillion, that is a massive amount of money that banks and various pension funds and a lot of big institutions now have on their balance sheet. And I've talked about this before. Remember, in March, banks failed like Silicon Valley Bank, and they failed when rates hit 4%. We're now nearing 5%. This is a warning sign. Now, again, like I said, yields may be giving us a reprieve, but you have to be nimble here, folks. This is very, very scary in terms of what it could tell us. Now, let's go into the numbers. Yesterday, check this out, guys. Yesterday, we saw the JOLTS data, and the JOLTS data is the job openings data. It shows you how many jobs are open in the economy for people to fill. We had expected 8.8 million job openings. We got 9.6. That means a huge amount more job openings than anticipated. Now, the kicker here, what did yields do? They said, oh my goodness, the economy is so strong, we're going to have to send yields sharply higher. And that's what we saw yesterday. Yesterday, the 10-year yield basically went to 4.8%. Now, in the overnight, again, yields, remember, basically trading 24/7, we saw yields hitting close to 4.9% on the 10-year. Okay, that is insane. Okay, again, hugely negative. We saw the S&P futures getting crushed overnight. Coming into today, and this is the kicker, guys, midnight, maybe early morning, yields began to fall. They started to fall to the point where going into this data, the ADP jobs data, we saw an expected 153,000 private sector jobs numbers. That's what was to be expected. We came in at 89,000, much weaker than anticipated. So yesterday we had much stronger. Today we had much weaker. Now listen, the big one is going to be on Friday, the jobs report, the non-farm payrolls. That's going to give us a clearer picture. These numbers notoriously can be a little iffy. So again, the markets are breathing a little bit of sigh of relief this morning. S&P futures are positive. But the kicker is when Friday comes at 8:30 a.m., what is that jobs number going to tell us? That is going to be the determining factor. But what's interesting here, folks, what's fascinating is that in the middle of the night, yields started to drop and go negative.
Industry experts see growing chances of the SEC approving a spot Bitcoin ETF, boosted by Ethereum futures ETF approval. Analysts anticipate up to $200 billion in capital flowing into a spot Bitcoin ETF. Important deadlines may be postponed until January, with the SEC actively collaborating with ETF issuers to refine applications. Bitcoin is seeking to surpass $27,850 resistance to potentially reach $28,500. Despite recent struggles, it's trading above $27,500 and the 100-hourly SMA. A rising channel around $27,850 is a key factor for further gains. Immediate support is at $27,500, with strong support at $27,200. Bitcoin's recent rise past $27,000 in October, dubbed Uptober, defies bear market norms. An unprecedented number of new Bitcoin addresses challenge bearish sentiment. Large holders are accumulating Bitcoin in 2023, showing confidence in its future. U.S.-based exchanges see declining Bitcoin reserves, indicating institutional interest. Bitcoin open interest in derivatives hits an all-time high, signaling sustained trader enthusiasm. Analyst Rec Capital discusses a potential 30% Bitcoin retracement before the halving event. Historically, pre-halving periods experience volatility and retracements. The depth of retracements may decrease over time. Maintaining support levels is crucial for a post-halving rally. The next 140 days are critical for Bitcoin, marking the last chance for a significant retracement before a post-halving rally. Concerns arise over heavy subsidies for Solana validators from the Solana Foundation and Alameda Research. Delegations totaling 106 million SOL primarily come from these entities, raising centralization questions. Solana co-founder Anatoly Yakovenko emphasizes the importance of online votes for network security, downplaying validators' stake amounts. Allegations suggest the Solana Foundation's influence over node operators viewed as subsidy dependence. Let's continue our discussion with Gareth.
This big move up yesterday, right? And then overnight, this was the move overnight, almost a 4.9%. And then all of a sudden, we started to drop. At 3 in the morning, 2 a.m., 3 a.m. Eastern time, we began to fall, and we fell, and then we got the number. And I will just say this, is that when you see this type of reversal ahead of a number like the ADP number, someone got that information early, most likely. It happens, guys. You might say, oh, that's so crazy, blah, blah, blah. It just happens. It's the nature of it. We know that when people have data, it's very hard for them to stay tight-lipped, especially when we see such dramatic moves in the bond market or in the stock market. So I think that's really important to recognize. The other thing to understand, too, is that if you looked on Twitter last night, everyone was talking about bonds and yields and how it was going to be crazy. What do we know about market tops? Market tops occur when everyone freaks out about it. Case in point, Bitcoin. Case in point, and again, I'm talking 69,000 on Bitcoin, right? Case in point, oil. Just recently, remember overnight it hit that $95 level and then it reversed and everyone was freaking out. So yesterday we saw everyone freaking out. Sure enough, what happens? A short-term top. Now, if we go to the daily chart, check this daily chart out on the bond market or on the 10-year yield. We had a topping tail, which was basically last week, and we got a small pullback. We closed here. Yesterday, we actually negated the topping tail. So this is an instance where, as a technician, I want to walk you through how I determine what to do. So number one, we negated it yesterday. So that puts you on alert. Oh my goodness, we negated the topping tail. Maybe we have broken this key trend line that I've referred to. But there's a couple things as a technician that you pay attention to. What you want to do first is you want to go to your weekly chart. So on Friday, this is what I'm watching. Do we come back in and close back at that weekly trend line? The weekly is really important, especially when it comes to the bond market. So we're going to watch that. Number two, if we go back to the daily chart, we have a new topping tail potentially forming today. So we might have another signal that the bond market short-term, the yields have topped here on that price point. So there are things to watch here, but certainly yesterday, I was caught a little flat-footed in that situation. Again, we saw the bond market, again, yields pushing up dramatically, and obviously bond prices were collapsing because of that. So what we're going to watch in the next couple of days, and I will walk you through each and every day going forward in this game plan, what do we see on the yield? Is it coming back by Friday to this area right here, which is around 4.65? Is it still, do we form a topping tail today? How do we react to that? And ultimately, what does it tell us about the economy? Because really, the jobs number today, the ADP private sector, starts to say, wait a minute, maybe things aren't as good as the JOLTS data yesterday showed, and that's very, very important.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.